What is going on, guys? Today we have a very exciting video. We are going to be talking about Alibaba stock again. This has been a hot stock on my channel. If you haven't watched my last video, we talk about some delisting concerns and why those are going away slowly but surely. And in this video, we are going to get into why, in my opinion, I believe that Alibaba stock has hit its bottom already. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start by looking at a couple of charts. What we are going to do is we are going to look at Alibaba versus the S&P 500. So Alibaba versus SPY. And what we have here is the 5-day chart. And even when you look at a deeper level than the 5-day chart, when you watch Alibaba stock and what the market is doing, what's very interesting and what's happening is that Alibaba on red days in the S&P 500 is going down less than the S&P 500. And when the S&P 500 actually spikes up, we're seeing Alibaba move up more than the S&P 500, which normally what you would see under kind of more normal market conditions is if a stock, if an index like the S&P 500 goes down, you would almost expect something that's more, more risk on like Alibaba to go down more than the S&P 500. So the fact that we're not seeing that is kind of telling us that something is up, something's going on there. So on top of that, when we look at the last 5 days, Alibaba is only down 0.68%. When we jump over to the S&P 500, we can see that the S&P 500 is down 4.83%, so significantly further down. We've had a large rundown in the market, and that hasn't affected Alibaba as much. And when we jump over to the month chart, seeing that this is even a month-long trend, we can see that the S&P 500 is down 3.8%, while Alibaba for the month is actually up 5.61%. So there's clearly a divergence here that even though the market is experiencing all this bad news that's going on and things that are beating down stocks, Alibaba is not reacting the same way, right? The investor base is seeing that Alibaba is starting to hit a bottom. They're seeing a lot of these positive things that are coming up in the future. And they're basically saying, okay, this stock is worth buying and worth, going up more than the index. And that's very important to where the stock is moving now, but not only now, but into the future as well. If you haven't seen this video already, I posted a video. This is the thumbnail for it, Delisted Alibaba. And what I go over in this video is another important thing to consider when thinking about whether Alibaba has hit a bottom in the market. And that is the fact that US companies, US firms can now actually go into Hong Kong and audit Chinese companies. This is absolutely massive news that I have hardly seen any articles, anybody discussing what's going on here. And that is going to be a huge catalyst into the future because we have spent 10 years basically worrying about Chinese companies potentially getting delisted as the SEC has kind of started to crack down and how they moved Alibaba onto their delist watch list. So all of that is starting to fade away, right? As long as nothing crazy happens where these auditors get to China and all of a sudden they're not allowed to see certain books, they find something interesting in the books that, concerns them. As long as nothing like that happens, this is an absolutely massive step forward to basically allow, these companies to stay listed on the New York Stock Exchange. And overall, that's going to bring investor confidence back into these companies like Alibaba, like Tencent, like JD, and drive up the stock price. Another reason that Alibaba has likely hit a bottom is this first green highlighted point we have here. China has recently been cutting their lending rates, and you as an investor probably realize how important this is. If we look at the last 2 years and what has happened in the US, right? The first thing that the US did when the pandemic hit is they started to basically drop their rates. They dropped their rates down so quickly, all the way to basically zero. And people were even talking about rates, going negative, things like that. But overall, this just pumped a ton of money into the market and into companies and overall promoted a lot of growth. China has recently started to see, its GDP drop down significantly, and it's worried a lot of people, it's worried a lot of investors, and it's clearly worried the Chinese government. And that is why they are looking at how do we basically get more money into our economy. And what they're starting to do is starting to follow suit with the US and drop their interest rates. And this is going to have a huge effect, just like we saw in the US for big tech companies, which Alibaba kind of falls into that category with their cloud space, with e-commerce, everything like that. So Alibaba overall is going to benefit from a lower rate environment in China. They're going to have more money to invest and bring on more customers. So overall, this is going to be huge for the stock. Right now, it's one of those things, right, where when interest rates first fell, we didn't see a lot of these tech companies really experience everything, all the benefits of this for maybe another year. So it's going to be something that we'll have to keep an eye on as interest rates in China drop. How does this help a lot of these big tech companies like Alibaba? And the final point to why I believe Alibaba has hit a bottom is this second highlighted green point. So Alibaba has gained dual primary listings on the Hong Kong Stock Exchange. It was actually already listed on Hong Kong, but basically this primary listing allows it to connect to something called Stock Connect, which connects it to mainland China, basically everyone in mainland China. What's interesting about China is basically they have a few different markets there. You can kind of see from this image, Hong Kong, Shanghai, and then I'm not even going to try and pronounce this one, but basically they have a few different markets that all of these people, can invest money into. My understanding from reading a little bit about them is that the Hong Kong market mainly deals with big tech within China, while these other two markets have a lot of, basically government-owned businesses fall into those other two markets. So Hong Kong is kind of an interesting place where it's kind of its own, almost its own country within China, has its own kind of rules and things going on inside of it, but they're becoming more and more integrated as time goes by. So overall, this will expose Alibaba to a lot more money that is around China, right? Basically right now, they're only in the Hong Kong area, but as they connect to this Stay Connect and get investors from the mainland, they will have a lot more money coming into the stock. This article on Seeking Alpha even gives a projection of potentially how much money could be additionally exposed to Alibaba through this listing. So here we have Chinese families put around 15% of their savings in stocks. That's a distant third after cash and real estate, which to this point, real estate in China has been tanking significantly, right? They're going through a mortgage crisis right now. I would not be surprised to see Chinese companies actually up this number from 15% as real estate becomes, less supported by the government, and as they go through this recession or this mortgage crisis kind of that's going on there in China. I wouldn't be surprised if, a lot of those real estate investors become more wary of real estate and this number actually goes up for how much money is invested in stocks. But anyways, according to the government, the Chinese government, the country is home to almost 5 million families, so 494 million families. If each of them has $10,000 in savings and 15% of that goes into stocks, we would see $741 billion worth of buying power going into the markets. So overall, what's kind of, you have to consider here is that's 741 billion, but right now they probably have a lot of money already in the stock market, in other stocks. So they'd have to probably sell out of other stocks to buy into Baba. So really, even if you get a small fraction of that, right? If you're getting, even a 0.5% of that, you're talking about millions and millions and millions of dollars that would be flooding into Alibaba and other stocks that would now be listed dually in Hong Kong as well as the rest of mainland China. So overall, that's a huge benefit to how much money you're talking about potentially going into a stock like Alibaba, because a lot of these consumers that are here in mainland China may even work for Alibaba or use its services on a daily, weekly, monthly basis. So overall, they have a lot of exposure to them. It's like a lot of investors with Apple, right? If you have an Apple phone, why not own a little bit of the company? And same thing over there in China, right? If you use Alibaba, why not own a little bit of Alibaba stock? So in my opinion, Alibaba has already hit its bottom. We have seen it get all the way down into the $70 range. And from there, it's kind of bounced up and it's leveled off. It even spiked up to around 120 just a couple months ago. And really, I think we've kind of hit that bottom where a lot of these bad news, bad things going on with the stock are starting to get resolved. And I think as we start to get a little bit of investor confidence back in the market, we'll see this stock run back up. So personally, I am long Alibaba. I do own quite a number of shares, and I'm kind of considering actually adding more shares. With a lot of this news going away and the stock price not reacting as much as I would have expected it to, I don't see it, the risk reward ratio is actually becoming, smaller, right? There's less risk and there's higher reward. So overall, I do like this stock for the long term. I think it could easily go back into, the upper 200, 300 range. I think that's definitely a possibility, and it's not a short-term hold. I think this will take a number of years to get back up there, but it's, in my opinion, could be a double up, could even be a triple up or higher. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.